Hi guys, so I'm very excited to show you one of the strategies that I have been implementing across the entirety of 2023. This strategy has treated me very well and I will continue to trade it in 2024. It is important to note that this is implemented on US30 and more specifically on the 5-minute time frame. So in front of you, you'll see a basic chart. We are looking at the 3rd of October. To start off the strategy, we select the vertical tool and we mark the previous day. So we will mark from 12 o'clock on the 3rd and we will mark 12 o'clock on the 4th. So in front of you, you will see the daily price movement of the 3rd of October 2023. Now the next thing you are going to want to do is select one of the tools on TradingView, and this tool is called the Fixed Range Volume Profile. Once you've selected this tool, you want to go ahead and look at the biggest swing of the previous day. As we can see, the biggest swing is this downtrend over here. So we want to select the top of the downtrend and drag it down and select the bottom of the downtrend. This will provide you with a volume level. As you can see, this horizontal red line here can be seen as your volume level for that day. You want to go ahead and mark that level with a horizontal line so that you can clearly see where it is placed on the chart. Now, what will invalidate the strategy immediately is if price mitigates that blue line before London open the next day. So we are going to go ahead and select a vertical and place it on 9 o'clock. 9 o'clock is London open in my time zone. So you will need to go ahead and look at your own time zone and mark off London open. Okay, so the first thing that needs to fall into place is that price should not mitigate this blue level before 9 o'clock. Again, to reiterate, if price touches this blue line before 9 o'clock, the trade is invalidated. So now let's see what happens if we play the price movement. Let's see if it mitigates that line before 9 o'clock. As we can see, the volume level was not mitigated before 9 o'clock. Which means we have a valid setup on our hands. What we will be waiting for now is for price to go and mitigate that blue level after London open, which is 9 o'clock. Once price has mitigated this level, we will look for a change of character to the downside and enter of any imbalances to the top. Let's see if price goes ahead and enters or mitigates that blue line or the volume level. As you can see, we are very close to mitigating the volume level. Let's just drop our speed down a little bit. After patiently waiting, we can see that price has indeed mitigated the previous day volume level. What we will be looking for now is a break of structure to the downside. So reading market structure appropriately, we can see that we had a high here, price came down, we had a break of structure causing a new low there. Price came down, we had another break of structure, meaning that the level we are looking for to be broken at this moment would be right here. Let's see what happens. And right there we have our first break of structure. Now, as mentioned previously, we are now looking for the first imbalance we can see to the top. As you can see clearly, we have a clear imbalance right over there. So we will be entering at the start of this imbalance, and we will set our stop loss a tick or two above the high. We will always be targeting a 1 to 2 risk reward ratio. So placing our short position tool at a 1 to 2, which is right there. Let's see what happens with this trade. We are in the trade and we have reached our 1 to 2 level. So as you can see, that was a valid trade. The volume level was left unmitigated before London Open. After London Open, the volume level of the previous day was mitigated. We had a break of structure to the downside with an imbalance to the top of the break. We entered at the start of that imbalance and we set our stop loss a tick or two above the previous high. So now for the second example. In front of you, you'll see the price movement for the 12th of October. To get this strategy started, you want to mark off your previous day. So we select our verticals and we go ahead and mark 12 o'clock on the 12th of October. We select the vertical again and we mark 12 o'clock on the 13th of October. Now we have selected our previous trading day. Next, we are going to go ahead and select the fixed range volume profile. After selecting this, we want to identify the biggest swing of the previous trading day, which we can obviously see is from this level right here, all the way down to this level right here. So we are going to go ahead and click right there at the swing high, drag it down and click right there to the swing low. Now we will receive our volume level. We want to go ahead and select a horizontal and solidify that volume level. Now, to reiterate, if price goes ahead and mitigates that level before London Open on the 13th of October, the trade is invalid. Just to reiterate again, if price goes up and touches the volume level before London Open, we are not trading the setup. So we go ahead and select our vertical and we mark London Open. In my time zone, London Open will be at 9 o'clock. Now let's go ahead and see if price actually goes and mitigates the volume level before London Open. So we can see that was quite close, but it has not yet mitigated that level. And now we are just past London Open and we can see that price has not yet mitigated the volume level, meaning the trade and the setup is still valid. Let's see what happens next. Right after London Open, price went ahead and mitigated the volume level. Now we need to use typical market structure to identify the low we are looking for to be taken out before identifying an imbalance to the top. So we can see we had a high here, price came down, we had a break of structure, price came down, we had another break of structure. So the current low we are looking for to be taken out is right there. Just going to zoom in so we can see more clearly. Let's play out and see what happens. Price comes down, it does not yet take out the low we have identified, so we are still waiting. And right there, as you can see, we have had a break of structure, a very small break of structure, but a break of structure nonetheless. So the low we will be looking for now will be this low right here. Let's see what happens. We have a new break of structure to the top, so price went from here to there. That was our previous high. Price came down to here and we had another break of structure. So our new low that we are looking to be taken out is right there. Let's see what happens. Price comes down, and there we have our first break of structure to the downside. Now we need to identify an imbalance to the top, and as we can very clearly see, we have a big imbalance right there. So we are going to enter off the start of this imbalance and put our stop loss a tick or two above the previous high. And as mentioned previously, we will always look for a 1 to 2 risk reward ratio. Let's see what happens on this trade. We have entered and we have made our profit. This is a strategy that I have been using across the entirety of 2023 as mentioned earlier. Some important things to note about this strategy. This strategy delivers 1 to 3 trades per month. So this is not a strategy that you will be able to go ahead and trade every single day, but it will be the perfect addition to your current strategy. It is something you can go ahead and add on to the things you're already currently trading. Another important thing to note is that this strategy does deliver an 82% win rate. I would advise any trader out there who wants to try the strategy to go ahead and backtest it yourself first, so that you can go ahead and confirm the information that I'm giving through to you right now. This is a strategy that is easy to follow, it has clear mechanical steps, and it will definitely bear fruit to all people who decide to use it across 2024. Thanks for watching and good luck with all your trades.